The broadcast is now starting. All attendees are in listen-only mode.
Hello, this is Jennifer Schaus, and we are continuing on in our second week of government contracting webinar series. Today we are joined by Ethan Berger, and he is going to discuss his insights and thoughts on the cybersecurity insurance market and if there is a crisis. As I mentioned earlier, we do have 7 weeks of government contracting webinars. The full list is on our website. They are all being recorded. So in the event that there is a webinar that you want to attend that you're not going to be able to make, please check back on our website. Usually on Mondays is when we post the recordings from the previous week. A little bit about us. We're based in downtown Washington, D.C. and provide various services for government contractors. This ranges from market analysis reports, capability statements, 8A certification, GS8 schedules, and these ancillary support services for contractors. We also host networking events and seminars throughout the year. If you go onto our website under the event section, you'll find a full list there of current and upcoming events. If you sign up for our newsletter, you'll probably be informed at a quicker pace. A little bit about me here as far as my background in government contracting, but more importantly, I'd rather talk about Ethan Berger and dig into his presentation on the cybersecurity insurance market. So Ethan, thanks so much for joining us today. I'll let you take over here, and thanks again for joining us.
Thank you very much, Jennifer. I think a good starting point is to understand that conventional business insurance will usually not cover cyber threats, and so that it will arise a need for pure cyber policies. But what's really kind of interesting is that the cyber policies in the marketplace are not attractive for most business organizations. The take-up rate of organizations in the United States are estimated to be, for large organizations, between 25 and 35%. For small and medium enterprises, it's much lower. Similarly, abroad, the take-up rate for cyber insurance is also lower. Now, next slide, please, Jennifer. And another thing to keep in mind is many organizations which have made claims under their cyber policies are often finding that the types of attacks they are experiencing is not covered. Part of this problem arises because the policies themselves are not well developed. I mean, they're relatively new in terms of what they cover and what they don't. Also, the face values of many cyber policies are too low. They're large deductibles and things like that. And another thing which has to be always kept in mind is that there could be a cyber insurance market failure from the standpoint of insurers or potential customers, as well as the insurance industry as a whole. And one of the takeaways that I suggest that you have is that the insurance industry cannot take multiple severe hits on policies. And so while isolated attacks, even a large isolated attack, might be something that the insurance industry could handle, those things which occur, for example, during weather cause attacks, harm, as well as even terrorist acts, those tend to be isolated attacks or events, whereas cyber, you have a cumulative threat problem. Next slide. Just very quickly, cyber insurance is a very complex thing, and most organizations now are following the DIST framework or ISO, or even that which ISACA, is promoting. But the question is, how do you judge the effectiveness of cyber insurance? What metrics to use? Are you looking at it from the standpoint of an individual enterprise? Are you looking at it from the systemic approach in terms of the overall economy or the sector? And it's very, very hard to judge because such a large number of organizations are experiencing hacks, but not necessarily very large ones. Next slide. Now, officially, the Department of Homeland Security is agnostic on the value of cyber insurance. And that's particularly true from the economic standpoint. But Homeland sees other very, very important reasons for getting cyber insurance, one of which has to do with going through the underwriting process, which forces organizations to really focus on their own cyber insurance, adopt preventive measures, form official policies, practices, and procedures higher up for cyber, so that the goal is to align the interests of the insurer to that of the insured. And if that could be accomplished, that would be really good. But the other thing has to do with encouraging the insureds to maintain a high level of cyber hygiene throughout, the idea being that there'd be an ongoing relationship between the insurance company and the insured. Next slide. I just share this slide because it will show in real time representations of the extent of cyber attacks which are occurring every day, every minute. It's always good to focus people's attention on these types of things because they're the types of things that people will remember after the fact. Next slide. There was recently a survey conducted at the Black Hat Conference, and generally I'm sort of a skeptic whenever I see statistics of this nature. I always sort of wonder the number of respondents there were, how serious they took the surveys, whether they're a pre-selected group, etc. But this survey, I think, is worth noting, one of which, one of the things that you focus on here is that 60% of the respondents expect that there'll be a major attack on U.S. infrastructure in the next 24 months. Another thing which is interesting is that about roughly a third are expecting that their organization will also experience a major attack. And finally, that a majority of respondents fear that they don't have enough staff to meet the threat and their budgets are inadequate to meet the threat. Next slide. Now, we recently experienced the WannaCry and Petya cyber attacks. These viruses replicated without human intervention, but generally they were viewed as not being terribly sophisticated. Still, the estimates are that they combined have caused harm in the low billions of dollars, and that also the vast majority of these claims are unlikely to be covered by insurance. Whereas the WannaCry ransomware was designed for financial gain and largely focused on organizations like National Health Service in England, the Petya virus was apparently politically driven. I mean, it began with an attack on Ukrainian organizations and actually started on Ukrainian Constitution Day, but quickly spread to other things. For example, DLA Piper, which had a Ukrainian office, or then Federal Express, Maersk, Merck, and most significantly Rosneft, because most people think that this virus was conceived in Russia and it comes back to haunt them, or at least a Russian enterprise. Now, another thing which is important to keep in mind is that the consensus is good cyber hygiene by organizations could have prevented the infection of the various targets. But unfortunately, there's a common exclusion for insurance companies, which provide that there will be no coverage in the event of failure to practice good cyber hygiene, such as patching. Thank you. Next slide. And so the question is it just futile to engage in cybersecurity? Is it does one have to be fatalistic about it? And the answer is not really, in the sense that there are basic precautions that organizations could take to reduce their vulnerability to cyber attacks. That being said, even the most sophisticated organizations may be vulnerable. Next slide. NSA, as you know, has experienced cyber breaches, or actually at least the passing on of confidential information by organizations or through organizations which are contractors to them, and they're individuals who carry this out. What's interesting is the government is usually fairly good at vetting the people that they're providing credentials to. And they very often will have sophisticated monitoring of their sites so they could look at unusual occurrences. But still, NSA, as everyone knows, has been victimized, as have OMB. And OMB, it was more apparently a conventional hack type situation as opposed to an insider threat person. Next slide. Now, social engineering is a big reason why organizations are vulnerable for outsiders attacking them. Now, Tim Bossert, who's the White House Homeland Security Advisor, fell for an email prank where an individual pretended to be Jared Kushner, and Bossert responded immediately thinking that it was Kushner. So this is actually kind of problematic, but it's also illustrative of the difficulty of training personnel not to fall victim to social engineering attempts. Next slide. Now, a lot of my thinking in this area has been influenced by three studies. One is by Lloyds, another is something that was done by a think tank specializing in insurance issues, but it was done for Swiss Re. And the last one was done by a bunch of researchers at RAND Corporation. The RAND Corporation study is less interesting in terms of the future because it's largely based on historic data, but it supports the idea that the cyber attacks that have taken place to date might be insurable. It's also a useful thing to look at because it shows lack of sophistication in the underwriting process which has been taking place to date, in that many of the policies which are offered do not require the applicant to undergo a cyber audit. And it largely is being done on the basis of documents. Next slide. The Lloyds study is really interesting, and it looks at attacks under different scenarios where there's a sort of a cascading effect of the cyber attacks. Once again, this is what makes cyber different from, say, a hurricane threat or even a terrorist threat, the idea that you'll have cascading losses. And according to Lloyds, on average, according to their models, it was $53 billion of harm by sophisticated cyber attack, and it could be as much as $121 billion. For comparison's sake, consider that Katrina was $105 billion and Sandy, hurricane, $70 billion. This past year, the number of insured losses went up 42% to $54 billion. So the annual damage that was insured in the United States, worldwide, was $54 billion, which is just slightly more than one cyber attack. And this sort of illustrates that the insurance industry would have trouble covering multiple cyber attacks, which had a cascading effect. Next slide. The II study is also really interesting, and ultimately they conclude that cyber insurance may be viable with respect to what they call daily life occurrences, which are basically cyber breaches of confidential information, but that extreme events, extreme scenarios are probably not coverable by insurance. And there's very little out there which suggests that these theories are not correct. Again, it's important to think that in order for a cyber insurance market to operate, the offers of the policies really have to be much more exacting in their coverage requirements in order to promote the potential buyers to practice good cyber hygiene. And then once a policy is entered into, the insured has an obligation to observe the baseline which they have set out for the insurer. This is basically creating sort of this education process for organizations. Next slide. I just want to share the results of a recent market survey on cyber insurance. And once again, there are some really, really important things. The first thing is what I mentioned. This is that less than a third of, large organizations have some type of cyber insurance coverage. Also, in the past 6 months, even though the number of cyber attacks is escalating, still less than 27% of the insureds who responded to this survey have acquired cyber insurance in recent months. That means that even though concern about the cyber threat is increasing, it's not like new purchasers are coming into the market. Some other things to consider. One, that the type of cyber insurance that most organizations require is probably much higher than the policies which are actually being sold in the market. The typical policy is only about $6 million. You can get policies, in the hundreds of millions of dollars, but that is the exceptions rather than the rule. There are other sort of surprising results that came out. One is that the respondents felt that the premiums were going down, and also that they thought the policies were adequately clear in terms of what was covered, and how these results can be understood in terms of what many analysts consider is hard to understand. Because quite frankly, I would think it's impossible for those results to take place, which once again raises questions in terms of the thoroughness people take in terms of answering these types of surveys. Next slide. The properties of cyber risk are unique, one of which is the idea that the harm could be either felt immediately by the victim or it could take some time. The dwell time, that is the amount of time it takes for an organization to figure out that they have been breached, what has been decreasing, but it's still extensive, running into the matter of months and in some cases years. The next thing is that the risks that organizations face are both first-party risks themselves as well as third-party risks, harm to others. And that harm to others could run a great range of things, which I'll discuss a little bit later. Once again, to emphasize the idea that cyber losses are not independent events. That is, it's likely that cyber attacks will propagate and spread through the internet, and so that the harm that one organization suffers is likely to be felt by others. Another very, very important thing is the absence of reliable data in this area. It's not like automobile insurance or casualty insurance for homeowners or shipping insurance. This is a situation where the data in the past is unlikely to reflect the future, and that the information on past cyber attacks is not considered to be very reliable. Next slide. I'm not going to go into great detail on this slide, but keep in mind several things. One, if you look at the very first item on the top left, where it shows the types of things that are caused, where it identifies hacks, viruses, and denial of service. When we're talking about hacks, it's not necessarily clear that we're talking about social engineering situations, and that is a big problem given that social engineering offers one of the most useful vectors for attackers to get into a system, and that there's been some litigation in this area where sometimes the courts find that the cyber breach should be covered in a social engineering instance. In other cases where social engineering is used to commit a fraud, that is, that due to social engineering, the organization is encouraged to send money to somebody else, and that's just a theft, through the dark net and whatnot. That type of thing is not always covered. There's great uncertainty in terms of what is covered and what is not covered, which produces a situation that people don't understand or can't really evaluate whether policies make sense to get. Anyway, I'll go to the next slide. I just want to identify some common cyber insurance exclusions. And once again, this is very important because the more exclusions that exist in policies, the more likely that an insured will find that the cyber attack that they've experienced will not be covered by insurance. One thing is data stolen from paper and similar records, which will then facilitate another attack, so that if someone or an organization loses information about how to access their systems, either through paper or through a misplaced computer or cell phone, when that organization enters a target's IT network, that entry may not be covered by the insurance. Some other things which, again, worth noting, failure to encrypt data, which is an example of lack of cyber hygiene, is often not covered. I referred to before the computers that are left out, the cell phones that are lost, are often not covered. A very, very important thing is that very often nation states, organized crime groups, and terrorist organizations are excluded, so that attacks, when conducted by those three groups, may not be covered. This, of course, will raise a big question, which is how does one determine attribution? Who will the burden be to show who the attacker was? Anyway, this is just a huge can of worms, which is likely to result in considerable litigation. Other things, prior knowledge of a vulnerability and failure to act on it is grounds for exclusion. And of course, not thoroughly representing the state of one's cybersecurity to insureds is a grounds for coverage. The forms themselves will be very, very detailed and can ask for a lot of information, and it's very possible that organizations in good faith may be filling out applications, but in fact, the information they provide to the insurance companies may not be entirely accurate. Another big problem is liability to an organization due to the actions of their vendors. Very often, the insurance companies will not want to insure attacks which are made possible either by the negligence of their vendors or basically insider attacks by vendors. Next slide. One of the common phrases you'll hear describing the cyber insurance market is that it is not mature. And what does that mean? It means many different things. One is that the absence of reliable actuarial data is not present. And this is a problem because ideally, for cyber insurance to work, there has to be an alignment of the interest between the insureds and the insurers. But where there's a lack of trust, that's a huge problem. If an organization is afraid to make a claim because it will result in the cancellation of their insurance, that's a huge problem. So that the idea of trust, while being central, also may defeat the effectiveness of cyber policies. Now, some very large insurance companies will have a policy where they will cover the first cyber incident that is something where coverage is being sought. But then they'll come in and make additional suggestions in terms of what the insured needs to do to get coverage. A second attack will not be covered. But this is a particularly huge problem because given the long dwell times and the possibility that liability for a victim of attack will only arise subsequently, since policies will be time limited, but the possibility of liabilities and having to deal with harm from cyber attacks will be far in the future, this raises the question for how you're going to be able to cover these things when prior acts very often will not be covered. So if you switch cyber insurers, you'll have to be purchasing tail policies as well, which makes a lot of organizations more skeptical about the value of getting cyber policies. Next slide. Globally, there are various estimates in terms of the extent of cyber crime. And you'll see numbers all over the place. You'll see figures in the hundreds of billions of dollars. Several years back, Alliance, which is an insurance company, and CSIS estimated that the damage is $400 billion. But if the premiums currently, which are collected worldwide, are $2.5 billion, and as I said, let's say organizations that are actually insured, against cybercrime is say 15 to 20%. That means that insureds theoretically should be experiencing $80 billion in harm, but the insurance companies are only collected annually $2.5 billion. This suggests why a lot of people who have looked at this issue believe that the whole cyber insurance market is not viable, that a lot of the insurance companies are focusing on making as many possible sales of cyber insurance in the near term without really worrying about their potential liability forward. This is sort of reminiscent to the whole mortgage crisis, where lenders were trying to sell as many mortgages as possible and not really worrying about their liability in the event of default. And so that raises what type of model to think of in terms of things going wrong. People have gotten a lot of attention to referring to cyber 9/11s, the idea that something is totally unexpected, or cyber Pearl Harbors, which is that the attack is expected, but still on a tactical level, it somehow sneaks in. But those are sort of single massive attacks. And actually 9/11 was not a massive attack. It was relatively limited. But I think what is far more likely is sort of an ongoing situation of cascading cyber harm from attacks, which potentially could cause grave damage to the economy. Because if people do not trust their vendors, if customers are afraid to place orders online, this will have a dramatic effect on the U.S. economy. Next slide. The federal government is probably going to be the organization that would have to step in the event of massive harm to the economy resulting from cyber attacks. But this is an issue that the federal government is reluctant to talk about, people in Congress are reluctant to talk about, because it will invariably mean that something will have to be paid for ultimately by the taxpayer. The government is unlikely to want to establish a cyber insurance program to address these types of things in terms of, say, losses above, $10 million annually. And things like trying to encourage insurance pools and other types of things that might make insurance more viable, sort of having standardized forms, that is unlikely to take place. Now, it's important to remember that it's really the state insurance commissioners who have principal responsibility for regulating insurers within their state, but consider the difficulty of trying to get a consensus on national health insurance, like Obamacare and whatnot. If insurance in the health area, which affects people on a daily basis, so that people are forced to think about it, cannot give rise to a consensus in terms of political action of this issue, it's very unlikely that there'll be a consensus to act about cyber insurance, but for a national economic crisis. And I think that organizations within the United States, both in the private sector and the public sector, should be trying to get government organizations, be it an executive part of the government and as well as legislators, to start being candid with the American people about the threat that the country faces from cyber attacks, which insurance, as it now stands, could not address. Thank you very much. Jennifer?
Thanks, Ethan. Great information. Thanks, everybody, for joining us today. The rest of the week, we're covering bid protests, grant writing, proposal writing, and filling your pipeline. So please tune in for our ongoing government contracting webinar series. If you have any questions about today's presentation, you can contact Ethan. His contact information is listed here on the last slide, or you can contact us and we will patch you through. Thanks again, and hope that you'll tune in for more of our government contracting webinar series. Thanks, everybody.
Thank you again, Jennifer.